Good day traders, Stacey Burke from Stacey Burke Trading. Today reviewing the Pound Aussie from August 30th, 2016, and just going over again the 4-step simple approach to keeping your Forex trading really simple. And we're not looking at other time frames on these examples, but we are looking at the 4 simple steps that can be used by traders. And first and foremost, probably the most important one is just knowing the most important times of when the market has the highest probability of moving, and essentially just break it down to this: Asia, London, or Europe and London, Frankfurt, London, and New York. So Asia, London, New York. Every single day, there's the banks open up shop. They control 60 to 70% of the market. It's easily searchable on Wikipedia, several other internet channels talk about this. It's no secret. They open up for business, they come into the market, and they move the market. They move that market based on their necessity to facilitate their own order flow for clients. They do it to make money. They do it because that's what they do. So we look at the market. Now, I don't normally trade Asia. I mainly focus on the London session. But the simplest setups that we tend to focus on involve looking for that opening range. So the range of the first few hours where the market makers have set up activity. And as you can see, just drawing some simple support and resistance levels around that pink box, roughly. Now we could just go back and look a bit at the US session. You see that that's been pretty much the same range. But as we go into London, we see the market break out and it's trending below the 20-period moving average. But what I look for is a trend line or a pattern break. Okay, so we look at our pattern break. We know where the Asia high and the Asia low are. So we look for the banks to go to work. They move the market. Then as London and Frankfurt open up and the largest trading volume in that 24-hour time frame starts to come into the market, we see that pattern break occur, or trend line break, whatever you want to call it. And what we look for is these consolidation patterns below a previous level of supply or above a previous level of demand inside the moving average, where we can see that cluster happen, because we know there's a coiling effect and the market is potentially going to explode and run to seek liquidity. And again, once it's done that, it potentially may consolidate, reverse, whatever. But we know that now as New York opens, we look and do the same thing. So we've got the Asia high and low that potentially could be acting as support and resistance. We've got the Europe high that's gone into place, and then we look for the market to open up into the New York session, and there we see the what I call the gift, where we see that clustering effect. There was no announcements happening last night, but we see that clustering effect where the market, I'll just change color so we can see that better, where the market builds up and starts to coil below the high. Now this is not the same sort of pattern, but it's the same effect of the market. Now in this particular case, they tried to flush out some weak longs, pick up some more order volume, and as it you see this consolidation below a high, building up positions, building up positions, building up positions, and then eventually breaks out, and we see the market continue on a very strong run throughout the US session. There was an announcement later on at 10 a.m. New York, but you can see in these situations we're looking for some simple things, but it's really important to understand the time of day. That later on we see after New York has come to work, London closes, but they've closed out long positions. So these traders potentially today have been willing to stay long overnight into the London evening. They've been willing to stay long the market. And so today will be interesting to see what happens, but there may be a definite strong bias to staying long. We didn't see a big reversal towards the end of the New York session, but again, 4 simple things to look for if you're just looking to have a really simple reproducible strategy. A little bit different on end of day, obviously, because the banks don't have an open and closing time or those hours in terms of the major market order flow, but time of day, wait for the banks to go to work and show their hand. Look for a pattern break. They've drawn traders in, somebody's trapped. In order for them to move the market, they always need to trap somebody. Number 3, stay on side of momentum with the moving average. And number 4, position yourself when that cluster and coiling effect happens inside of resistance or inside of support, on side with the moving average when you start to see that build, and watch what happens. Keep your downside tight. As you can see, when you're wrong, you shouldn't be wrong by much, and when you're right, you should be looking at 2, 3, maybe 4 or 5 times your risk. Keep it simple, traders. Hopefully this video has been helped today. Keep it simple. Stay focused, stay disciplined, and be patient, because this happens pretty much almost every single day on one of these, definitely on the British Pound cross pairs. Have a great week trading, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.